So this document has some general instructions on business news, how to cover business. So what you will have to do is essentially, if you start preparing yourself, of course, you have to monitor business news on a daily basis. You have to become like a news junkie. Okay, so here this is from Reuters. You can actually just monitor business news, and then if you see any particular article that interests you, you can read that in detail. Okay,
I'm actually doing that on a regular basis, and I have a few positions myself.
Okay. Yeah. So that's good. So this is all the stuff, other stuff, right? Now everything here is actually, this Bloomberg Quint has also gone behind a paywall, so you can't really read this. You can't read the articles anymore. They want you to subscribe. So this has gone behind a paywall. Now I think Reuters is the only one which is not behind a paywall. So here, if you're in India, you set up this news feed. Wherever you are, you set up a Google news feed, and then you click on business. Okay. Okay, click on business, then you get the business feed. So what you should monitor is, you should monitor this every day. Monitor all the business news, and if you want to read something in detail, you can read it. Okay, so this is one thing that you should do. Then I've given this link. Global business news is for Reuters, and then as for watching TV, I don't know where exactly this will the link.
Bloomberg broadcast.
Yeah. So that is actually, so there are two things that you should be doing. Now this is actually going from the website. This is not a good link. I'll have to change this link. Let's go through YouTube. So essentially what you have to do is, you have to monitor, if you're in India now, you have to monitor two types of news. You monitor local news, for which you watch stuff like CNBC TV.
Yes,
you watch it maybe at least an hour every day. Okay.
I do that power breakfast thing from 7.
Yeah, whatever it is, whenever it is you want to watch. Okay, watch that. That's it'll give you good coverage of India. But that's not sufficient. What you need to have is, you need to have coverage of the global economy and the global financial markets, for which you should go to the Bloomberg broadcast through you. I find that the YouTube broadcast is much more stable. Okay, so if you go to YouTube and you do Bloomberg's Live, okay, you search for Bloomberg Live, okay, you'll get this link which shows live now. Okay. And so you click this. So this is actually broadcasting, it's actually 24/7. It's not even 24/5. Okay, it's 24/7. And on the weekends when the markets are closed, they have some very good interviews with people in Silicon Valley and all kinds of CEOs. So it's very educative for anyone who's getting into the industry. So if you follow this, I would recommend the best time to follow this is actually during during New York hours. Okay. Which is around 7 p.m. now, 7 to 8 p.m. after 7 to 8 p.m. our time. Okay, so follow this for 1 hour or so during New York hours. Even if you don't understand anything, it doesn't matter. So all of this material that I'm asking you guys to track, okay, is stuff that you should track on a regular basis. Okay, whether you understand anything or not, it doesn't matter. And the stuff that you don't understand, you should make a note of it. Like if they're discussing credit default swaps and you don't understand what credit default swaps are, then what you do is you make a note saying that, okay, you credit default swaps. So later on you'll figure it out somehow. Okay, later on, maybe after 6 months, you'll see another kind of program where they're discussing, and eventually it becomes clear to you. Okay, but you should keep track. This is what I call defining the frontiers of your ignorance, right? Instead of saying like, oh, I don't know anything, you can now say, okay, one of the things I don't know is credit default swaps. Okay, so this is very important. So it has to be done regularly.
I wasn't giving much weight to the global news, but now I will.
No, you must, because it's a global world, and the right way to look at Indian business is to look at it as a subset of the global business landscape. Okay, so it's a fast, the global process of globalization is not really going to change much. Okay, it will continue. So it's very important to look at global markets, and Indian financial markets especially are quite underdeveloped. So it is very important, if you're going to be a finance student, you must understand US financial markets. Those are the most developed financial markets in the world. So that's the right way to study finance. The other thing that you see in our finance teaching, the way I teach the finance electives, is we focus very much on US financial markets. Because if you study based on the Indian financial markets, there's a lot of stuff that you will never study. So it's important to focus on the most developed markets when you're studying some subject conceptually. Okay, because there are many things that are going on in the US which you can learn about, which adds to your conceptual understanding of finance. Which is why I think the right way to teach finance is with a focus on US financial markets. Okay, so this you do. Okay, another thing that you do. This is
to track those markets as well.
No, this. Oh, I mean, you don't have to overload yourself. I think if you what you track is, I'll tell you the four major markets that are most important. Actually, if you see, the four major markets which are most important is C. You can set up you can take this charting link, Trading View. Okay, they have pretty good chart. You just have to set up a login. Okay, you can set up a login here. You can track all kinds of stuff. So I think that this most important markets, actually, if you see here, this asset classes, markets, and instruments. So if you have a taxonomy, so this is part of the framework. This is one of the frameworks that I use, which tells you basically just there are four major asset classes. Okay, and there are these types of instruments. Okay, so one of the things you should do is basically, if you want to just track global markets, the most important markets in currencies, I would say, if you just want to track two of them, cable is not that important actually. You track EUR USD. Okay, you can see it here. I'll upload the video onto the website so you'll be able to see it. Okay, so you just have to type EUR USD here, you'll get this. So the euro is most important. Okay, and the other one that is important is USD JPY. I mean, I'm just trying to reduce the load because we should not overload people. I mean, because okay, so you have USD JPY. Okay, and you can change the granularity here. If you want to make it 1 day or something, you can change the granularity of the chart. Okay, you can see here dollar yen looking like a ready to make a break for it. In fact, I might have to buy some here. Just set it up. Let's see. Yeah, so here this is something. It's looking like it's going most likely to break this thing. So what I'm going to do is actually I'm going to set a buy stop order over here. Okay, which will take which will put, once it exceeds this price, once it makes a new high here, I will enter a buy stop order, but it's pretty close. Okay, so I'll have to do that. So the two major currency markets, I mean, just to make your, if you want, you can follow all kinds of stuff. You can follow all the major currencies. You can follow USD, AUD, USD. Okay, you can follow Canadian dollar, but the most important I would suggest are Euro USD and dollar yen. Okay, so now we go to the other asset class. Look at the equity markets. Okay, so you should follow the SPY, which is the SPY. Actually, this has to go into stock. Okay, the SPY is actually an ETF which follows the S&P 500 index. Okay, so this, I think it's better to follow through Yahoo Finance. Okay, because
why the ETF?
This is an ETF actually. SPY is an ETF. ETF, you know what ETFs are? Exchange traded funds.
Yeah.
So it's an ETF. ETFs are very popular nowadays. So this is an ETF which follows the S&P 500 index. Okay. So what I really want people to do is to follow the S&P 500. Now we are looking at equities.
No, I was asking why do we need to follow the ETF instead of the index?
Oh, you could follow the index also. I just follow the ETF because the ETF is easier to trade. If you follow the index, you'll have to trade the index futures.
Yeah.
Okay, which is the E-mini S&P 500 index futures. Okay, you can do that, but the ETF is easy to trade, so you can try. Doesn't really matter. Either way, you'll end up following the US market. You can follow the index also directly. For that you have to type GSPC.
No, I was just asking you.
No, that's my reason basically, because the ETF is easier to trade. Okay, so that's why. Otherwise, nothing. It's the same thing. Whether you follow, it's about 1/10 of the index. The ETF, if you see, ETF is around 287, right? And this is 2879. Okay, so it's 1/10 of the index. Okay, so it doesn't matter. The chart will look the same. If I remove the scale, you won't be able to tell the difference. The chart will look the same.
Okay.
So you can follow the S&P 500 index also. It's GSPC. Mainly, what you have to follow is the index, and this is just a proxy for that. Okay, so you follow a major equity index, which is the S&P 500, and so what you should follow is this, and then you follow your Indian index, which is the Nifty 50. Okay, the Nifty 50 is good enough. Okay, for India. So that's that takes care of equities. Okay, now we look at bonds. For bonds, what you should follow is there is this thing called TNX. Actually, you can follow. Yeah, TNX is good enough, I think. TNX will fall under which I think it falls under index.
So I really don't know much about bonds. So should I start with a book or something for bonds?
You can start with a book for bonds. There's the best book on bonds you can read is actually a book called, it's very expensive actually. It's called Inside the Yield Book. It's by Homer and Leibowitz. It's a bit expensive, I think. Maybe it's 5,000-6,000 rupees. But it's a very good book. It's a book on it's called Inside the Yield Book. But there are other things you can do. Is you can look at the US Bond Market Association, okay.
And I can just keep tracking it, and like you said, I could note down the things I don't understand.
Yeah, you can do that. Yeah. Okay, so then I'll show you another site also, which is we can put the site over here in this general instructions. Some of the good websites, so we can put them down below. Okay, there is a website here called there's a website called This Matter. This is a good website actually. Not very well organized, I would say, but it's actually good stuff. Okay, so this is actually, here you can learn. I mean, none of the stuff here is wrong. Okay, so all the stuff is accurate. This is one of the problems on the web. Okay, because there's a lot of stuff which is all kinds of garbage. It doesn't give you the right information. So This Matter, I'm putting this here, and then I'll email you this website. I'll email you this file, this document.
Thank you.
So you'll have all the links. Okay. So this one is also a very good website, the Fred website. Here you can get some charts. This is St. Louis Federal Reserve Bank. So all these links are already there. Okay, you can get this link there. Here you can, I use a lot of the Fred charts. Okay, so if you take, so another way you can track this, another way you can track the debt markets is through this. Okay, so now equities is over, currencies is over. Now we're talking about debt. So for debt, you should again track, this is the most important debt market in the world, the 10-year US Treasury. Okay, because everything, all global capital markets are, being priced off this. It could be any maturity, but the 10-year is the most active. Okay, so this is the St. Louis Federal Reserve Bank. Okay, they have a very good website. There's a lot of data on this website. Okay, very good quality data. So here you can track and see. This is showing you, what this is showing you is essentially is the interest rate on 10-year US Treasuries. Like right now it's 252, which means 2.5%, which means the US government is borrowing for 10 years at a rate of 2.52. Okay, and then you can use other sites where I think this, if you see a site like Trading Economics. Okay, we'll try to if we take Trading Economics, there are many sites which give you the Indian bond yield, but here you can see, so since you're in India, you should also track the while we are in this debt category, you have to find out where India is here. Indicators, countries, Europe. India is part of the G20. So here, now here you should track the Indian government bond yield, the 10-year government bond yield. So if you track this, so I'll put this link also here. Okay, so if you track this, make this a little bigger. Right. Okay. So this link is also here, so you don't have to note down any of these links, and anyway you'll see this in the video. So you should track the government bond yield and just see. Basically for these kinds of these things which I'm telling you to do, the charts. Okay, this is one of the most important types of skills you can develop. Is just develop a feel for how these markets are moving. Which means you have to keep on eyeballing the charts. Look at the charts every day, if not possible every day, once a week or something. Whenever you get the time, keep on looking at the charts and keep on trying to form a view on the market. Which way do you think it's going to go eventually? Because in every role that you have in finance, you'll have to take a view on the market. Okay, every kind of finance role, whatever role an MBA does. Okay, every role will involve taking a view on the market. So you have to develop the skill, and this skill is not so easy to develop in the sense that it's not something like coding, where you learn some technical things, and once you have learned the syntax, there's nothing more to learn for the syntax per se. Okay, you know what the syntax is. Okay, but this is not like that. This is something where you never really learn it completely. Okay, it's very nebulous, so it's hard to get a grip on it. So you have to keep on developing. Okay, so this is showing you that this is the same thing on the TNX, which is a CBOE index. Same thing, US 10-year Treasury note. You'll see here it is 25.12 because this is again multiplied by 10. Okay, so 2.51, and that is 2.52. It's the same thing. Okay, so that takes care of debt. If you look at US Treasuries and you look at Indian government bonds, that takes care of debt. Now only thing left is commodities. Two most important commodities you should track. Oil price you can get from the Fred website also, and you can get it from here also. If you go to,
So I was just tracking Brent crude.
you can track Brent, but the West Texas is a little more speculative. There are two main grades of oil. Okay, there are many grades, Arab Light and all that, but the most important traded grades are Brent crude, North Sea Brent, and West Texas Intermediate, which is the US benchmark. It's a North American, yeah, WTI. That's the North American benchmark. So the WTI is more speculative. Okay, so this will come under CFD, I think. Yeah. Here, if you took at in this charting view, if you take crude oil, you'll get crude oil charts on the Fred website also.
Okay.
Okay. So these are, I would say, for commodities, the two important markets you should track are where is that chart? Here. The two important markets you should track is one is crude oil, okay, and the other is gold.
Gold.
Okay, you can track copper also if you want,
Gold
but
ETF.
no, not ETF. Gold again is traded just like currencies. So there is a global OTC market which operates in the same thing. This Wellington to New York, 24 into 5. Okay. So the most important gold market in the world is actually in London, which is the London bullion market.
Okay.
So that's an OTC market as opposed to an exchange traded market. So there is some exchange traded gold contracts also on the, in the US. You have COMEX Gold, which is now part of CME Group. But the OTC market is more important. So you have two important fixings in gold. There is a morning fix in London and an afternoon fix. The afternoon fix is slightly more important because the New York guys are also in by then. But a lot of, like all our jewelers who are buying gold, if you talk to any of these Tanishq and all these people, all of these guys will know many of their contracts may be priced off the London morning fix. Okay, so there are two important fixes in gold. So, so two commodities which you want to track. One is crude oil. Okay, so follow what is gold. Crude oil find charts you'll find on Fred as well. Okay, I've closed the Fred site. Okay, but you get lots of long-term data on crude. This is good for intraday charts. This software, this website. This is good for intraday charts. But Fred is good for long-term data.
Like intraday positions.
No, I don't take intraday positions, but I look at intraday charts.
Okay.
Because I can fine tune my stops.
Okay.
You see, because like
really actively track them.
not that actively, but like for instance, I'll just show you this cable thing that I was showing you, right? Here. Now, if you look at only long-term charts, if you look at only daily charts, you can't see that much granularity. Okay. Now, if I want to go short cable here, I can't see much. Okay. If I want to see all this squiggly stuff here, if I want to zoom into this, okay, I need to go for some intraday charts, which means I go for, let's say, 1 hour to start with. So this 1 hour means this is the granularity of the chart. Now I can see a lot more detail. On the daily chart, it was just looking like a squiggly thing over here. Now I can see the finer price action. So I can set the stop a little better. So when I went short over here, I set the stop over here.
Okay.
And now that this has dropped a little bit, I can see, I can also look at 15-minute charts. And I've lowered, yeah, okay, so the intraday charts are used for that, essentially. That helps you to set tighter stops.
Okay.
Okay, that's why I use intraday. But I don't actually trade intraday, in the sense like, see, if this goes, the only two things can happen here. Either it goes in my favor or it goes against me. If it goes in my favor, then I will hold it because I see this dropping quite a lot, below 124 and all that. So I'll try to actually hold it and then I'll try to add more to it. That's called pyramiding. When it goes in my favor, I'll try to increase my, yeah, it's pyramiding. So this is pyramiding is normally used for profitable positions. Okay, so when it goes in my favor, I will be looking to increase my total position size. So I won't take profits on this. I will actually try to add to the position so that I end up with a bigger position because it's going in my favor. But if it goes against me, now I've already lowered the stop to this point. So if it goes against me, then it'll just stop me out over here, which means I'll have almost like I'll have only a very small loss on this position. Okay, so that's why intraday charts are important. Okay, so you set up here, oil is, I've already showed you the ticker. Okay, so oil and gold. For gold, you can just, once again, you can just type gold. Here you can, yeah, XAU USD. If you type, you'll get gold. Okay, because AU is the symbol for gold. if you remember your periodic table. Okay, so that's why silver is traded as XAG USD, because Argentinium AG is the silver code, right, in the periodic table. So this is XAU as the gold code. Okay, you can also look at gold as a CFD also. Okay.
What CFD?
CFD is a contract for difference. Okay, if you see CFDs, they have gold as a CFD. CFD is a contract for difference. It's a type of way of settling. It works very much like a futures contract, but it is an OTC instrument. CFD is an OTC instrument. Okay, so all this sports betting and all, you have a lot of this betting companies in the US, sports betting companies in the UK, which offer CFDs on various markets.
365.
Bet
365.
I don't know. That's a specific company you're mentioning. I don't remember them, but they offer CFD contracts on CFDs on major indices and all that. So you can track gold also. So two major commodities, gold and oil. If you want to add another commodity, you can track copper also. Copper is very important in global trade. Okay, so you can track copper also if you want to increase your commodity coverage. So that takes you through all the major asset classes, right? We have covered currencies, commodities, equities, and debt. Okay, so that real estate is another major asset class, but it's not really actively traded. There is only one futures contract in the US, Case-Shiller Home Price Index. There are futures contracts on that. You can trade futures on Boston real estate, Boston home prices, San Francisco home prices. So, but they're not very active. I mean, they haven't really taken off in a big way. So, yeah. So here you have the other links. Essentially, I've given all the links for tracking various markets. Okay. And you follow news. I think that's more than enough if you do this. Then there's a Oanda research website called Market Pulse if you can follow this. I think it's more than enough.
Okay.
Okay. All right.